Where are we at with the big picture gold and silver cycles? Hi everyone and welcome to Ainslie Insights, brought to you by ainslie.com.au, the home of Ainslie Bullion, Ainslie Crypto, Ainslie Wealth and the Gold and Silver Standard. Be sure to have a look. Today, welcome back, Dhruv, the man, the myth, the legend. Look, we have had so many people reach out and say, can you just get Dhruv back on? Like, we need to hear from him. We've been so busy. We haven't had an opportunity to sit down and actually dig into this stuff for this year. But look, I don't want to give you too much of a big head, but ultimately, Dhruv was right. Seems to be how this year is playing out so far. How are you going today, Dhruv?
Good, Chris. I think we have a good title for this video.
A good title. Look, Dhruv was right. Is never going to make it to the title of this video, but I'll say it only once, and that's at the start here. You talked to us last year about so many of these things. In fact, not just last year. You've been talking about this really for as long as you've been on Insights. This idea of the four turnings and how you expected certain things to play out, that we were really heading into that period of time where it was going to be really volatile. We're seeing that today. Today we're talking about potential escalation yet again of the US-Iran crisis. There's this stuff constantly going on in the background that is almost word for word what you were predicting a long time ago in terms of what this fourth turning would look like. So maybe catch us up from the end of last year to where we are today. What's been going on? How have you been thinking about the markets? Just give us the big picture overview to start us off.
Yeah, absolutely. So, the beauty of these bigger picture cycles and long-term views is that not a whole heap changes from month to month. So if there hasn't been a video in a month or two, it's nice that we get a chance now to catch up, because while seemingly heaps has changed, we've seen a huge blow-off rally in gold and silver. We've seen a pullback and a healthy correction since then. A lot of geopolitical turbulence and things like that. So it seems like a lot's happened, but when you zoom out to the bigger picture cycle, it's just snailing, moving forward inch by inch. So let's take a look at where we think we are in the land cycle. The 8-year cycle, is more or less the same. There's more chaos leading into the end of the fourth turning of the 8-year cycle. So each turning is 20 years. We're in the fourth 20-year phase of that macro 8-year cycle. Generally, the transition from one cycle to the other is marked by significant geopolitical turbulence, as well as an establishment of a new financial system. So, while we've been talking about this for a while, it's just really interesting to see it play out in real time. Looks like, stablecoins, CBDCs, artificial intelligence, US government debt are all playing a pivotal and central role in this transition. However, and these are all things that we're seeing play out in real time. However, the one part that is playing a central role in this transition that we knew would be absolutely pivotal and central to this whole transition is gold and silver. So that was something that we were able to see. Anyone who studied this could have really seen it decades ago, because as you're transitioning from one human system to another human system, you do need something that has navigated those transitions over thousands of years. So a God-given asset that's reliable, that's eternal, will transition those human-made systems. So that's something that, I've been repeating for a while now in terms of precious metals playing a role in it. So interesting to see AI and all these other things take form in real time. Where we are with precious metals, in the macro 8-year cycle is very much just hold, average in, and sort of enjoy the ride, or as much as you can possibly enjoy something like this. But just have your wealth outside the mainstream financial system with vehicles like gold and silver. Let the system transition over, and then you can re-enter the new system in whatever capacity you want. But then, with precious metals, people are, I think, interested to know about what's happening in a more slightly zoomed in phase. So rather than just looking at the 8-year cycle, we look at the 18.6-year land cycle as well. And metals act in a relatively predictable way as you transition from one land cycle to the next. And then there's the 8-year gold and silver cycles as well. So I think that's probably worth zooming in on a little bit. The 8-year cycle will keep playing out to the end of this decade and into the early part of the next decade. Just a quick overview on that for anyone that might be watching this for the first time. The last time we went from a fourth turning to a first turning was at the end of World War II and the Great Depression. we saw gold and silver go on like a 30-year bull run leading into the 1980s, nearly a 40-year bull run after that phase. And we saw the gold to silver ratio spend the fourth turning elevated well above 50, which is what we've seen in this fourth turning as well. In the first turning, we saw a drop from that, 50 to 100 space down to the sub 50 space, or more 20 to 40 in the first turning. And in the second turning, so sort of 1960 to 1980, it spent those 20 years in that 20 to 40 region. And as gold and silver went on that multi-decade bull run with the GSR in between 20 to 40 leading into 1980s, that's where you saw that insane parabolic move to silver. So we've long been anticipating a similar long-term view for silver moving forward. And again, the things that are bringing it into fruition are, the combination of the remonetization of silver, the monetary aspect, the decentralization, the hard money aspect. But then you couple that with the energy demands, especially as things become more and more, dependent on AI, and AI becomes more mainstream. The energy demands of AI are insane.
Yeah.
And so silver's industrial use cases within batteries and solar starts to take a sort of center stage as well in terms of the silver narrative. So that's something that will continue into multiple decades as the new world takes shape. So that's the real broad overview. Now,
Before
sorry.
you get into, just before, because I know you want to bring up some charts and sort of step us through like that picture and narrow it in for us. But there's one thing I just wanted to pick up on, and that's the talk of the GSR. Now, you've been convincing me for quite a while, and I've taken more active role in managing my gold and silver position relative to that GSR from conversations that you've had, because it's sparked a few ideas in my mind. And I've been extraordinarily successful with that over the last few months of really moving a little bit of timing. Like it's almost, I look at it as trading, but a trading where I can't really lose because I'm just switching one for the other. At the end of the day, I end up with more of one metal than the other. But we've seen volatility in that GSR that's really quite not normal. You don't really see it move in swings that are quite so large. So it's been quite profitable for me to time that a little bit, where you had gold really taking off ahead, getting up into those high GSR numbers, and then switching sort of over at that point some of that silver back into gold, and then trading it, holding it on the way down. I'm not suggesting people should be active traders in this, but there have been some genuine medium-term trade opportunities present themselves through this volatility. That's something precious metals traders might not be, or precious metal holders who are traditionally watching this might not be thinking about.
Yeah, definitely. I think when you're trading the GSR, if you're doing it a little bit more actively, spreads become a pretty important consideration. Ainslie's got gold and silver tokens on the blockchain, and the spreads on those are minimal. So if you are actively trading the gold to silver ratio, it's called the gold standard tokens, and the silver standard tokens will be a lot more sensible than physically moving gold and silver around. Now, the trade opportunities, and especially using those tokens would be great. And you can always redeem those tokens for physical metals whenever you want as well, should you want to take a more longer term view. It's like, okay, I've traded this enough and I want to stay in gold or silver for multiple years. You can just, essentially let us know and walk away with the metals. The trade opportunities in the GSR is really because of silver's volatility. I mean, it even surprised me in terms of how fast it moved in the last few months. I mean, my first target for silver for US was $91 US. And I knew it would get there, but I didn't think it would get there that fast. Not only did it get there, it shot straight past it.
Well, I'm pretty
So
sure I asked you at the very last one we did last year, of a prediction of it hitting 100, and you were like, "Oh, like I'm bullish, but I'm not that bullish." Well, it blew through that, like absolutely blew through it.
exactly, yeah, and I mean,
When Dhruv's not bullish enough, that like that's
concerning.
unusual.
Yeah, I mean, I'm surrounded by a lot of silver bulls, but I've always felt like I was, everyone always thought I was like almost too bullish in silver, and I was like the silver guy or whatever. But I mean, it surprised me even. So I really, seeing it go from like $30 an ounce Australian a few years ago to where it hit, 160-ish or wherever it ended up recently, that's an insane move. I did expect it to get to those numbers, but I thought it would be a little bit later this year that we'd sort of hit those numbers. Now we've hit it and we've pulled back to really a macro 50% level. That 91, just if anyone's interested, is just the first target for that big cup and handle. And I think because silver's been building that, was like a 40-year long cup and handle pattern. Um, the longer the compression and consolidation, the more violent the repricing tends to be. And sort of like holding a beach ball underwater, like the more it's suppressed, the laws of nature eventually take hold,
Right.
and it just reprices violently. Same works in the other direction as well.
Because and bringing back to that GSR trade, like
Mm,
I agree with you, the spreads make that very challenging
mm,
normally. But these moves, we're talking. So when I was looking at it, I was sort of looking and going, there are multiple percentage moves per day.
yeah,
So when you're talking about, 15, 20% moves in that GSR, because it's such a small number, right? It doesn't take much for, when you think if the GSR is 50, just picking a round
yes,
number, GSR is
yeah,
50, a move of 5 is 10%, right? That's a 10% move. So
yeah.
it's actually been substantial. These moves have been large enough that they've made it even profitable beyond the spreads. So I agree with you. Like in theory, that the spreads always create a problem for that in the physical trade, but there have actually genuinely been opportunities in that. I mean, it would be a fascinating one to me if we see, for example, an escalation in conflict that we think could be potentially coming out of Israel, Iran, US, whatever happens there.
Mm.
Gold really rocketing off, the GSR going right back um, up there if silver didn't take off again. I mean, the AI story hasn't changed. The silver shortage story hasn't changed. To me, it would almost be a rotation opportunity gifted to us if we were to see a spike, a really aggressive spike on that. Where what's the worst case? Like the worst case in that scenario is that you just end up with more of one or other the metal. They're both good. Like that's more how I'm looking at it. Just saying that there's actually been genuine opportunities to trade it.
100%. I'm actually glad you brought up that specific scenario because you know, we've always, especially bringing it to the land cycle, we've always expected the GSR to trend down leading into that final peak of the land cycle. And once the land cycle peaks and you get some sort of pullback, especially in stock markets, but across most markets, the GSR does have that final spike. And that is really the generational opportunity for that trade. Um, once every 20 years. But if you're looking at the 8-year cycle, it's that centennial opportunity. Is that next spike in the GSR? My base case is that's really, if you're able to get silver at that point, or make that trade at that point, that's definitely a gift, like you said. And the market almost never gives gifts, but if it does, that's one expectation that I think will play out as well. Um, and that'd be a good time to make that trade. Also, probably a good time to move dollars into silver. Just for anyone, again, if they're watching this for the first time, GSR is just a really simple trade. I've seen a few people do this in the wrong direction, so we can't give advice or anything when people want to make trades. We are just a facilitator and an educator in that sense, but when the GSR is high, silver is cheap as priced in gold. It's how many ounces of silver give you 1 ounce of gold. So if it's going to take you 80 to 90 ounces of silver to give you 1 ounce of gold, silver's undervalued in gold terms. But when it's 50 or 40, at that point, silver's starting to get more appropriately valued in gold because now it only takes 40 ounces of silver to give you an ounce of gold. Average for the last 100 years is about 50 for the GSR. But every great civilization that's ever existed, that GSR has been sort of 16, 18-ish. So arguably the fair value for the GSR is around 16 to 18. In the last 100 years, the average has been 50. So you could take a more recent, century view, which is a bit more of a short-term view, I guess, in this case, and then take the 50 average. But if you're taking a multiple millennia view, it's been more or less undervalued for about a century, which is interesting because silver got demonetized about a century ago, and now we are seeing that trend. I wouldn't call it a trend just yet, but we are seeing the real beginnings of silver being remonetized. And it was recently remonetized by the Indian Central Bank, the RBI, RBI. RBA is the Australian one. And so, that if that leads to some sort of trend, that would be huge. Now, I'm not expecting it to, change massively, but if we even use the last 100 years, we saw multiple decades 30 odd years where it was between 20 to 40. So that's sort of what you could call maybe a more appropriate pricing.
Look, what's 100 years between friends, right? But talk us through some of the charts, because I know you've brought
Yeah.
along charts as you do. Step us through sort of maybe how you would often do this, start from the big picture and zoom in, to sort of show us really what's going on here. When you say things like where we are in the land cycle, you track
Um,
very specific metrics for that. How are they looking?
so this is a chart we've looked at a few times. Now, this is just looking at the peak of the previous land cycle. So people might be familiar with this chart, but it's just important to see what the base case expectation is and where we think we might be sitting in this from a time frame perspective. In pink, you have stocks. In blue, you have land. You can see land sort of peaks before stocks in this land cycle and starts falling off. You see stocks continuing on into that peak. This was the global financial crisis, so October 2007. And this divergence is an early indicator that, we're hitting the final peak of that cycle. Now, from a timing perspective, 18.6 years is the average for that cycle. So we would expect to peak sometime in 2026 from an average expectation, for a normal cycle. So we're in that time frame now. But then as you zoom in, this divergence really tells you that it's time to start paying attention, because land's been falling off. You could see something like this for stocks. There's like a 60% drawdown in stocks. People getting close to retiring at this stage would not want to see more than half their pension funds or super funds, lose value, lose half their value. And then it takes many years for it to recover. Here you've got gold and silver sort of tracking up with stocks into that peak. You see a quick dip in both of them, but then they recover pretty quick. So gold here has recovered its all-time highs, while stocks is still kind of carving out a bottom. And then silver takes a little bit longer to consolidate, being a smaller market cap. But this in green is the GSR that I was talking about. So we've got that trend down of the GSR into the peak of the land cycle, which is where we are now. We're sort of somewhere here. And then when you get this pullback, now, this pullback could happen this year. I've actually got my eyes on 2028 for this pullback. And I'm actually thinking that, land sort of puts in its peak sometime this year, and this divergence gets bigger over this and next year. And 2028 is my view on that, specifically because 2028 is a Shemitah year, and every major peak in the last 100 years, whether it's the global financial crisis, the dot-com peak, the recent one in 2021, which was that inflation concern and the Eastern European conflict, the OPEC oil crisis, the Great Depression, the European recession before that, they were all Shemitah years. So that's definitely a year of interest for me, which is 2028, for this sort of event, where the stocks really fall off.
Can
And
I just
again,
ask a question there? So for people who are trying to understand what you mean by the land cycle pulling back, what does that practically mean for them? Does it mean that their house prices are falling, for example? Does it mean you can finally afford a rental? Well, how does that practically translate?
it translates into a deflationary bust, more or less. So employment falls off, interest rates get cut down to zero. The bond market is unstable, so you'll see the move index spike. You'll see house prices pull back. Now, in the previous one, Australia was sort of bailed out by China, because China was going through a massive growth phase at that time. Australia, being largely commodities led as well, tends to feel this a little bit soft, and we've got better banking regulations here. But in America, I mean, everyone knows what happened in the GFC to house prices. That being said, at the very least, you see a slowdown, and I think we're seeing that already. Anyone in rural Victoria can attest to that. Anyone, even with apartments in major, cities like Sydney and Brisbane and Melbourne can attest to that. Commodities, and this is broad-based Western civilization. So if you there will be exceptions to this.
I have another question on that, because there was an article, I don't know if you've read it yet, but we were talking about it a little bit in one of the groups that we're in, about the potential for this AI-driven unemployment to actually. I can see an overlay here potentially with the land cycle, because the argument was that if we start to see a real spike in unemployment on the back of AI productivity gains that just don't require as many people. So where you sit on that spectrum is largely irrelevant. I think we're to the point where most people would argue that at least some people are going to be displaced in their jobs. There's going to be some level of structural unemployment. So if you were to see that, everyone's focused on the unemployment bit, but they're not focused on the banking impact of that and the credit impact of that, where all of those people have home loans. So
Yes.
if they suddenly find that their income is squashed, even if they're on government sort of provided income, it's not
Yeah.
the same as the income they were earning before in their high paid job. Does that put pressure on banks? Does that then ultimately result in properties having to go up for sale? Is that the kind of practical on the ground reality we might see in this version of the land cycle peak?
Yeah, exactly. So there's always a different group, or different collection of factors that will catalyze the pullback. And AI, I think, is, I mean, clearly going to have, it's when you're saying some people are going to lose their job, it's going to devastate the job market. So even the biggest skeptics have to agree that AI is going to absolutely decimate the job market. So that's going to have carry on effects. A thing that's been of interest to me, and this is a bit more speculative because AI is a blind man can see that that's kind of baked into the cake at this point. But something that's a bit more speculative is the unrealized capital gains taxes that could be coming on. And I know in some Scandinavian country recently, I heard that that's kind of baked in for 2028 as well.
Right.
And that's going to be in law. And I think it's something like in the 35% ballpark. So,
And the mechanics of that, so that would then mean you've got people who are somewhat forced, because this was always my issue when the Australian government recently was talking about that, where they were saying, well, wanting to do that with super funds. And I went, well, that doesn't make any sense, because some of those super funds would be forced to sellers in that scenario. They have to
yes.
sell their property because they can't pay the tax on the unrealized gain. So ultimately, if you bought something for 100,000, and I mean, who can buy a property for, let's say, $1 million? You bought a property for $1 million. It's gone up to $2 million, and you've got to pay tax on $1 million of profit. You don't have the cash, so you have to sell the property. That's the sort of stuff we're talking about here, isn't it?
Exactly. And it's not just property, it would be on assets in general, I think. So, you could have a stock portfolio, you could have crypto, you could have all these different assets that you suddenly have to pay a bill on money that isn't real because you haven't sold anything. You don't have the liquidity for that, and you become a forced seller of assets. So you get the sudden influx of assets that are forced to be on the market all at the same time around 2028, and it's a Shemitah year and lines up with all these different cycles. That could be a catalyst that I've actually got my eyes on. It's very concerning because it's not. This is where it starts to get dark, and it's not really just cold hard numbers anymore. This is where real human stories come in, and it gets quite the catastrophe if it becomes very real. Because it's one thing for someone to buy a property and it's doubled and it's great, their investment portfolio, they're forced to sell their investment to pay the gains on it. That's not the worst thing, but this will also apply to the mom and dad that have earned money, worked hard, paid income tax on that, then used that to buy a property, paid stamp duty, paid all sorts of tax and council rates and all sorts of holding costs for that over the years. They've paid their dues, they've paid off their mortgage, it's their family home. And then their kids have grown up in that home. They've got their height markings on the walls and this and that. And then they suddenly get a bill for they've probably got $1.5 million, $2 million worth of unrealized gains in that, which they never plan to sell. It's their home. They suddenly get a huge bill that there's no way they'd be able to pay. And then kid gets a call from their parents, hey, we've got to sell our family home because and we're forced to sell it and do something else. So those sorts of stories are really tragic. And it would be. It's honestly, I mean, I would be surprised if it goes through, but the fact that it's gone through in some of these Scandinavian countries already and it's passed through in legislation, it is a little bit worrying. So something like that would devastate the housing market, the stock market, and most financial markets. Now, whether it's because of this or AI or a bond market tantrum in the US, there are so many different things that could cause it. And I hope it's not something like this, but it's definitely something I've got my eye on.
And I think it's just important context, because, like you said, that's more speculative. That's not necessarily what's going
Yes,
to happen. But
exactly.
I'm more trying to align that these cycles, it's almost like when that happens, we shouldn't be overly surprised. Or if that were to happen, we shouldn't be overly surprised, because that's kind of what the land cycle was telling us was likely in one form or another.
Correct. And, with the previous land cycle being the GFC and this land cycle peaking being also the 8-year cycle peak, it's, the GFC is good for a bit of a reference point, but it's really the Great Depression in terms of the socioeconomic scale of what we're looking at this time around. So it should be bigger and broader than the GFC, which is why, something like a tantrum in the US bond market, which is essentially the foundation of the entire global financial system, would make a lot of sense. That's something that, eye-watering levels of US government debt. They've been downgraded by all three credit rating agencies. Central banks are buying more gold and US government bonds for a first time in a long time. And, 5 times their usual gold purchases since 2022, ever since the Eastern European conflict. So there are all these different factors pointing to trouble in the US bond market as well. So we can speculate all day about what might cause the pullback. But like you said, the main thing is to not be surprised when the pullback does happen. And to bring it back to precious metals investors, when you see land and stocks and this sort of divergence happening and you get this final spike in the GSR, this is because gold has pulled back less than silver. Gold is really just your safe haven blue chip collateral. It's impossible to compete with it. In a flight to safety environment, it basically is where you want to be. However, this is the opportunity for silver, because once you get this spike, you see what happens next is the GSR falls off a cliff, massive outperformance by silver, huge parabolic ascent. So, if we're somewhere sort of here right now and we're sort of seeing this phase leading into the peak, for long-term investors, this is all noise. It's really, you get into this phase here, and then this is the phase that you look out for. So people that are really interested in where we are right now and what's happening next, if you're averaging in all through this phase, and this is, multiple years, that's really just the simple long-term approach. To try and navigate it perfectly is quite dangerous, because you just don't know exactly, where you are in the short term.
So that gives us a pretty good view there. Were there any other charts you sort of brought along to
Yeah, so that's
narrow in a little bit from the big picture?
Yes, so that's just a quick overview of where we might be in the land cycle, what to expect with the GSR moving forward, and what to expect with stocks. Let's have a look at a little bit more of a zoomed in view for what sort of happened in the last few weeks. Inflation is sort of down. The Fed is looking at not cutting rates at the next meeting. Unemployment's ticking up. So a lot of people are talking about why the Fed is not cutting interest rates. And I think that has to do with the bond market. So you really need bond yields to be rolling over a little bit to create that room. And if you look at the bond market this week, it has rolled over. If the bond yields continue rolling over, I think what we're looking at is basically rate cuts on the table for the next meeting. Not necessarily bullish, but that's, again, in the short term, we're in that turbulent phase in the middle where stocks could continue up for a little bit longer. We don't know where we are with the peak of the land cycle just yet, like whether it's peaked already, whether that divergence has started, or so exactly where that peak comes in. But as you get closer and closer to it, you just see more and more things that align with that. I think probably looking at that land cycle a bit more zoomed in would put it into perspective a little bit. So looking at the macro, here you've got the home builders ETF in the US, and this was the GFC. So you saw the high, you saw a lower high, and this is where it fell off. This line here is October 2007. That's where the stock market peaked. And so you would have seen stocks actually going up into this phase here, and then that fall off. Now, this was the Trump tariff spill off. It's eerily similar. You're sort of playing with this trend line. You're not really getting above it. This is sort of the time frame that we're looking at. I've got this blue line on here for a reason. If we break these highs and continue on, that means that divergence isn't really in place. Land is continuing on. It might peak sometime this year, early next year, because these are long-term cycles. There is a little bit of tolerance in terms of the exact timing window. However, it's not really looking great at the moment. It looks like this is playing out similar to that. So we might have that divergence starting now. And if this falls back down below, similar to this, with stocks kind of continuing up, that puts us at a time frame of sometime this year for a peak in the land cycle, and then that's where you really got to start paying attention. So it's one of those things that we just track month by month, and we can zoom in on that a little bit as well. So this is sort of where we are today. This was the Trump tariff spill, decent recovery. This is roughly the 50% level that we were looking at. It's sort of failure to launch. It looks okay at the moment because we have broken this trend line. We have kind of just gotten above this. This is a weekly chart. Now, this could very easily roll over here. What I really want to see is a break above these highs to get that comfort that there is a little bit more runway on this. If this rolls over, then really, people need to brace for that first chart that we were looking at, saying that we're not far away from this sort of final sort of peak here, that this, we're sort of here then, and stocks are sort of somewhere here, and then just get ready for this turbulent mess. And again, the simplest long-term view for this is averaging into precious metals, and then you can play the GSR. If anything, this green is your trade, but then enjoying that, precious metals are just going parabolic here, while land and stocks are just a choppy mess. So that's generally where we are at the moment. I'll quickly bring up the Shmita chart as well, because I've got that here just to show the uncanny way this works. I mean, every 8 years roughly, but that's the S&P. That's just every 8 years, every Shmita year. And, whether you're looking at the .com pullback, the GFC, I don't know if you can see
It's a
my
very compelling repeating pattern there.
Yeah, so you've got that the Great Depression early on there, and we're entering that time frame now. So looking at a strong pullback on the S&P sometime into 2028 is really where I've got my my macro view on.
So last question, just to wrap this up. So you've shown us all that, you sort of narrowed it in. What do you assess the probabilities at that really that line you were talking about before, that we break above in the land cycle and we've got a longer runway, or we break down? Is it really going to be driven by things like geopolitical events? Is it going to depend on the escalation of the AI build out and how quickly that impacts jobs? Like, because I've seen predictions of everything from, we've got months till that's a big problem, to we've got still years ahead. Does all that sort of play in ultimately to whether we break above or below that line? That's probably my final question.
I think what's important is that so the land cycle, the land markets will peak before stocks. So you'll see a clear, like, even if we don't break above that and we start putting in a confirmed downtrend, like we break the lows of the land markets from the Trump tariff spill, that's your confirmed lower high and lower low. We've still got a decent decent amount of time for stocks generally to continue up a little bit longer. People don't really start paying attention, and the real fall off a cliff and the real institutional instability and banking collapses, they don't really happen until the stock market has dropped 30-40%.
Yep.
So there is that little bit of runway there. We'll know pretty soon what's happening with the land markets. If we break above, then we've got plenty of runway to go. If we start rolling over here, then stocks don't have that much runway. My base case is that land markets peak this year and stock markets peak around 2028. So that would actually tie in perfectly from a timing perspective, where you've got land rolling over for a good year and stocks continuing up in some sort of bubble, and then just some sort of major collapse. Again, that being said, there is turbulence along the way. Like, nothing goes up in a straight line. Even if stocks were to continue up into that 2027, 2028 timeframe, a pullback this year is expected just from a more zoomed in cycle perspective. They've all got their own cycles. So stocks has the S&P has its own 4-year cycle, and a 4-year cycle low is expected later this year. So whether that marks the actual peak, whether that's just a sort of shorter peak before a final run up into 2028, which is a left translated 4-year cycle, and then the peak comes in around 2028 with a massive fall off around that 2028 timeframe, or whether whether this is the peak. But most assets, interestingly, from a cycle perspective, have a significant cycle low this year. So you've got gold and silver in the 8-year cycles from 2022 to 2030, having the half cycle low in 2026, which means a consolidation for precious metals this year, and then a strong move up for precious metals into 2027 would be a cyclical expectation. For stocks and for Bitcoin as well, a major consolidation this year followed by a strong move up makes sense. So yeah, that 2028 timeframe makes a lot more sense for most assets, but the land market is where I think all the clues will be given upfront, and we'll have an idea pretty soon. What drives it and how quickly these things drive it, really difficult to anticipate.
Look, Thank you so much. I know, the Dhruv fan club will be very glad that we finally got you back on. You finally got to update us on where we are because so much has happened. But also, as you point out, nothing really happens at all because we're talking about much slower cycles. So it's all what you expected. But a lot of great calls over the last sort of 12 months and more into what we should expect coming into this period. They've played out so far. So we'll continue to watch those. Look, we won't keep people waiting for too long before the next one. We'll try and get back in and have another discussion soon. But thank you so much for that today, Dhruv. Everyone will really appreciate it.
Thanks, Chris. Really good to talk to you. And yeah, we'll keep these coming regularly now. Things have calmed down a little bit. So usually when you see the gold,
we'll see what the next wave brings. But for now, somewhat returning to normal.
When you see gold and silver going parabolic, you might not see me for a few months.
When it all just stops, that's why, because we're all just all hands on deck.
Yeah.
Look, thanks again. Thank you everyone for watching. We'll chat again soon.